Hello and welcome to Scrolling with Ceazor. Today is August 3rd, 2026. It's a new month. I've been pretty busy today. I'm moving this month, so I'm packing boxes, and so I don't have a whole lot of time to do a lot of stuff, but still going to pump out this podcast every day if I can, as long as I don't run into any major problems. But anyway, so as always, though, this is not financial advice. You do what you got to do. Now, this is the second time me recording this. For some reason, my microphone wasn't plugged in properly, so it didn't record. So I recorded the whole thing, and now I'm going to record it again. So I'm going to probably burn through this a little bit faster, and but that might be good. So anyhow, so taking a quick look at the chart, most crypto is down or up within 1%. So up or down about 1%. Except Sonic had pumped about almost 4% today. It's pulled back on that pump, but it still looks pretty bleak. But anyhow, so what about Hype? Hype is up 4%ish, like bouncing around in the bottom of my range, which kind of sucks. And then let's take a look at the stonks on chain. So I've got these stonks. I opened on Remises on Robinhood, and I put them in liquidity pools and farming some fees and stuff like that. But anyhow, so yeah, I think I'm doing pretty good on this one. So the S&P is up today. It's bouncing around its all-time high. And I don't know what I'm going to do. I might leave it like this. I'm going to think about this a little bit more and see if I need to close a bet, like take some profit off this or move it. So, because I'm up from about here to here plus fees. So that's pretty good. And then also there's like a little bit of buying low and selling on the way back up, right? So, but here's the interesting one. So here we have Google. So Google, I rebalanced the other day, yesterday or the day before. Yeah, yesterday I rebalanced a little bit. So I took the stable coins out of the bottom here and I stuck them in the bottom here up until the price, which was about here. So I put them all down here. Now it was kind of pointless because, they're down here and they didn't get touched, and it just continued to go up. Now it's getting pretty close to the top of my range, so I'm going to rebalance this again and kind of change this because I should probably take all of these stable coins out of here because I bought all of them down here, and then they just continue to go up. I bought a little bit more here, and then I sell it. So I've been in range. I've been collecting these fees, but that's one of the beauties of this, this setup, the way the new concentrated liquidity positions on Ramses is you can easily pull from the ends. You can pull coins out of the ends of these and then repile them on top of the liquidity positions that you have. It's really quite straightforward and easy to use. So you can check that out. I would highly suggest you do it if you're planning on betting on stocks. I've drawn this line here to kind of see where I'm going to probably, take everything below this out. Because I don't want to buy down here right now. I don't know where it's going to go. If I'm going to buy, I'm going to buy down in around this range again. So I'm going to pull these stablecoins out and put them to work somewhere in, like, just say interest-bearing stablecoin place. Okay. Okay, moving on. So I've got lots of tweets here for you today. Not too many, but I've got a lot. So let's go through and scroll with Ceazor. Okay, so Robert for Polaris has dropped a new testnet. So there's a new testnet out. You can kind of jump in here, play with this. It's a Polaris bootstrapping testnet thing. Now, I haven't had I haven't had a lot of time to really dig deep into this, but I know this protocol pretty well. I've read through the docs. I'm going to do a video on it pretty soon. I played with their first testnet. If you want to play with their second testnet, then by all means, please come and DM me or DM Robert here, and he will set you up with some tokens to play with this on testnet and give him some feedback. Yeah, so check it out. Now, I'm a little bit biased on this. I did see this. I think it's got some super good potential. It's got the proper cyberpunk ethos to it. It's good stuff. Okay, so moving on, Liquidity now allows you to, Liquidity is Y bold. So if you take some bold, you stick it in Yearn, you get about 10% APR, and now it's collateral for Frankencoin. So Frankencoin is a Swiss franc stablecoin. So you can borrow up to 85% LTV. I wouldn't borrow 85%, but maybe 60 or 70 or however degenerate you want to be. But your collateral is earning 10% if you use this as collateral. And then you can mint this for a 2% interest rate. I don't think it's a steady, like it's 2.1 right now. So there's probably some sort of curve. I haven't looked at Frankencoin, and I don't really need to because I don't really use Swiss franc. But there might be a bet here because if we open up the Swiss franc, let's take a look. CHF. Let's see. I'll just use the futures, I guess. If you look at the futures chart and we kind of pull it out long-term versus US dollars, you can see it's been a pretty good US dollar hedge versus, US dollars. So there might be some sort of hedge here. Now, if you do mint it, then you do have to give Swiss franc back as to repay your debt when you want. But at least you're not going to be losing money versus US dollars. As long as you can find somewhere to put this Frankencoin to get some good interest on it, then it's worth exploring. I haven't done it myself, but you can definitely think about it and look around at this. This is a good exposure. You're only exposed to Yearn, Liquidity, and then also Frankencoin. So check it out. So Ombre Wallet is slowly becoming one of my favorite wallets. They're very active. They have a good ethos on their head. They care about the stuff that I care about. And here they are doing a talk with Matt from Privacy Pools. Privacy Pools is the one I use. I like it. I like the flow. I like the way it works. It's a little bit expensive to be always kind of, using Privacy Pools for everything. But, if you wash some of your wallets with Privacy Pools, it's kind of worth doing. But anyway, so here they are going to do a chat on, what is it, the 5th. So that's in 2 days. I'm not sure if I'm going to be able to meet that because it's kind of a bad time for me, but I think it might be an interesting chat talking about privacy and privacy on Ethereum and privacy transfers and all this kind of stuff. Okay, moving on. So here we have this person here. I don't know who this is, but they tweeted out about I'll follow them back just for the hell of it. Yeah, I'll follow you back, dude. So the Lindy effect, it doesn't get enough attention. Frax Finance has spent 5 years building across DeFi and stablecoins, compounding integrations, security expertise, and on-chain track record. In open financial systems, time is a part of the moat. So I agree with this. Like Frax Finance is huge. It's got everything, like every possible DeFi thing that you can think of. Frax built and deployed and like maybe forked a little bit, but usually they put some iterations on it. Like let's kind of just peel through the list off the top of my head. So they've got a stablecoin, they've got a savings account stablecoin, so S version, so you just deposit and you get the yield. They got that stablecoin is on so many chains all over the place, right? They've got their own liquid staking ETH, so FRX ETH, you can stake that as well to get yield. They've got their own L2 chain. They've got their Fraxnet chain, which kind of integrates TradFi with DeFi. They've got their stablecoin. They've got a bridge. They've got like a siloed lending platform. They've got a swap platform. They've got all kinds of stuff. So like as you can see, just throwing a list out there, like it's just massive. They're heavily integrated with Curve. They've got their own instance of Convex. So the Convex kind of has their own, like they have a Frax Convex system. They've got a VE governance token system. They've got all kinds of stuff. So they've been following along with DeFi and absorbing the ideas that come out of DeFi and building their ecosystem up hugely. It's enormous. And all this time, 5 years, I've never heard of any issues. They did a migration a little while ago, and that's probably the only issue that came across as something of a pain point. Okay, so this guy here tweeted this out. I don't know who this is, Furry. He's apparently the founder of Con3 Protocol. And he's talking about like, hey, you should take a loan. So $62,000 loan from the bank, pay, 7.5% and buy one Bitcoin. And in 10 years, you owe the bank, twice as much, right? But Bitcoin will be at, like 600,000. And that's like 5x to 10x for free money. Just do it, right? Worst case scenario is Bitcoin is 128K and you break even. He's like literally free money. Don't overcomplicate it. This is kind of crazy to me. Like you're betting your house on a 10-year. This guy says it perfectly. You're betting your house on a 10-year price forecast. The bank still wants their 7.5 every month, which is exactly right. You don't want to take you don't want to use credit and do this. This is super high risk and I almost childish, I would say. But now here's an alternative. So if you go to Aladdin Protocol FX USD, you can actually literally use Bitcoin as collateral to borrow a stablecoin, and then use that stablecoin to buy more Bitcoin. So you're kind of looping, You're not using your credit, right, to do it. You need collateral, and it needs to be over collateralized. But there's no interest on this. You pay the one-time fee of 0.5%, and then there's a closing fee when you want to actually exit this. So you could just use Bitcoin, borrow, like say you had $100,000, you could borrow $50,000 or $60,000, whatever is not going to get you liquidated, right? And then use that FXUSD to buy more Bitcoin, and then you just got a small like 1.5x loop or something. And then when Bitcoin price goes way up, you just sell some of it, repay this FXUSD you owed, and you're out. And there's no interest. There's no ongoing interest here. So like that's a way better play than like, you know, having to every month pay your interest on this on the loan out of pocket, right? Anyhow, moving on. So Pendle. Pendle, I really like them. I use them a lot. I hold some Pendle tokens as well, so I'm a little bit biased on this, but I keep looking at this and I keep wondering about it a little bit. I haven't had time to really dig deep to see what's going on here, but they say they're buying back, so they're using like the protocol revenue to buy back Pendle, and as you can see, the Pendle emissions have slowly been declining, while the buybacks have been pretty spiky, but as you can see, the green is all this like money that's been spent, basically, right? And as you can see, it's going down. So they're down 77% since the start of the year. So from almost, I don't know what this is, probably 80 or 90 down to like 20K Pendles. So now I have Pendle. I have it staked for S Pendle. So I think I'm getting emissions. I have to look, but so I don't think they're doing any buybacks and burns. But in essence, they're buying back some of their emissions. I hope they're burning it all, but at the same time, it's kind of like buying back and incentivizing. If they're buying back and burning, and then also incentivizing with emissions, then it's kind of the same thing, right? As buyback and incentivization to some extent. So anyhow, so you can check that out. I think Pendle's pretty cool. I use it a lot. They've got some like looping now as well, so check it out. Okay, so here's another one from Frax Finance. Frax Finance resupply summer is here. The Curve Finance Llama Lend V2 SFRX market is a core part of the offering. So you can use SFRX as collateral on Llama Lend and borrow stable coins via this resupply. I got to look a little bit more at this, and I haven't really been able to find the Llama Lend V2 website, but I'm sure it's there. I just have to dig a little bit deeper. But yeah, so using interest-bearing stable coins to borrow other stable coins, and then use those stable coins to get more interest rate stable coins is good stuff. So you check it out, check out all of this stuff, and find out if this is something you want to play with. So DB Crypto has this tweet here. It's pretty crazy shit, man. So there's this blockchain analytics company called BitQuery. Their entire product is tracking money. So their job is like, oh, we will track money for you. Just trust us, right? And we will tell everything what's going on. So yesterday they sued their former CEO because the CEO was using QuickBooks, the spreadsheets, and their bank account to basically siphon their treasury. So they were able to, their job is to follow the money, but they weren't watching their own money. That's hilarious. Okay, moving on. So Vitalik has this long tweet here. I don't want to read it all. I definitely can't read it all. The way he writes is you got to read it yourself and kind of absorb it. So I'm going to TLDR a little bit of what he's talking about. He's got 2 points here. Number one is he's like the L2s are not really cutting it. They're not doing what they need to do, and maybe they're kind of wasting time. So he's like all of these like branded shards. So if we go to L2 Beat, we've got all of these guys. He's talking about Base, Arbitrum, all of these like L2s that are kind of like general use L2s. He's like, number one, they're stuck in stage 2. So stage 2, they're stuck below stage 2. So if we go here and we sort by stage 2, there's only 4 that are at stage 2. And I don't really know if anybody's even using these, right? Like, I don't know what their TBLs are. Does it say here? Yeah, so there's less than 1 million. This one's got like almost no money on it. There's no data here. So it's just like one has like around $500,000 on it, and then the rest got nothing. And then all of the money's on these like corp chains, and they're not upgrading to stage 2. They don't need to. It's like, forget it. We'll just keep going at stage 1 as long as the users are there. And he's like, we got to fix this, bros. Like, we got to get this done, right? So another thing he says, if you are doing an L2, like do something more specialized. So you can think of like Rise Chain, which is like a perp, high throughput perp central limit order book chain, right? L2. Or you can look at Lighter, which is like another perp, L2. So instead of making a general chain, he's just suggesting people focus on a single individual use case. So more like a dApp chain than anything. And then he's like, yeah, we need to push for like native rollup stuff and precompiles and all this kind of stuff. He's like, we're kind of like losing sight of the North Star in that sense. So that's what he's kind of talking about. Okay, last tweet I have here is a Sonic ecosystem. I haven't read through this Sonic Sunday Digest, but it's pretty good. So you can read through all of these little tweets and back check what he's talking about. But I'm gonna just kind of read through this TLDR here. Now, I do have Sonic bags, and I'm kind of biased on them. I hope it comes back. I feel like Sonic is like kind of like my home chain, where I've always feel like going back home. All the people I loved, they have some pretty bad history in the sense of like what's happened in the past couple of years. But I've talked to their new CEO in depth, and I think he's got some good shoulders on his head on his shoulders, right? So I hope he can revive this thing, and I'm gonna start sharing about it and talking about it a little bit more and do my part to kind of bring it back to its glory and so forth. So let's take a look at what this roundup or this Sunday Digest kind of talks about. So number one, Sonic is reducing friction for users by supporting builders with gas sponsorship and shared infrastructure. So yeah, they always had that fee monetization thing where they were giving like the gas back to the builders, and the builders can then give it back to the users, right? So I'm not sure if that's what they're talking about here or if it's actual 100 gas sponsorship, gas abstraction, arguing a sponsor. So yeah, maybe this is like I have to look at this. I haven't had a good chance, but maybe it's a way for like you can just like if you're using certain dApps, then you don't have to even pay gas. It's just going to get done. So I'm going to have to look at it a little bit deeper and find out what's going on there. I think that's pretty cool. So they gave $20K to some grants and some engineering support for some teams who did like this demo day thing, Founders Demo Day. That's good. So the Sonic transactions crossed 210 million transactions with new highs of daily volume. So that's good. It's not booming like it was when it first launched, but it's still like we are in a pretty Goblin Town-ish bear market where there's very few users looking to do things, and there's new Robinhood chain. Solana's still trying to like scalp everything, and so there's still like all this stuff going on. But anyhow, let's keep moving. Ecosystem teams advanced liquid strategy. So there's more teams building stuff and dropping stuff around. So we've got liquid strategies, lending limits, RWA perpetual market, cross-network execution. So that's all happening. Notable upgrades to Flying Tulip US dollars. So they increased their borrow caps this week. A whole bunch of burns on FT supply burns, and some new collateral integrations. So yeah, you can check through all of these in details if it's something you're interested in. I really hope that Sonic kind of recovers and like obviously price is everything to most people. So people, if they look at this price and they're like, oh, this is terrible, only down. But there's so much more to the ecosystem than just the price. But the price is important everywhere. Like even if you look at ETH, right? If we just open up ETH, it's pretty down from its all-time high. It was at 5K, right? It was bouncing around 5K-ish, and now it's down to like 1,800. And it could go back down again and bounce around. Like it could even go down to 1,600 or 1,500, and it wouldn't be crazy, right? So everything's down, everything's hurting, nothing's doing fantastic price action-wise. But the ecosystems are still working, and people are still using, and DeFi's still alive. And I think it has potential. So that's it for today. Hope this has been interesting, useful. Thank you for listening, and goodbye.